Saving money is something most people want to do or are already doing, but where that money sits often gets overlooked. A lot of service members and spouses are doing the right thing by spending less than they make and saving money, but savings might not be working to their fullest potential for you. And that can slow your progress, even when you're trying very hard. So, in this episode, I'm talking about high yield savings accounts, what they are, how to choose the right one for you and your life, and how to maintain it. I'm going to share some strategies you can use and stick with, especially with all the craziness and transitions of military life. So, here we go. Why high yield savings accounts matter. You don't need to be perfect with money to benefit from a high yield savings account. You don't need a huge balance, you don't need advanced knowledge, and you don't need to chase every shiny financial trend when something as simple and functional as a high yield savings account is around. So this episode came about because I'm in the middle of a decision about a high yield savings account that I have. I've had one with SoFi, and I'm deciding whether it still makes sense for me to keep my savings there or move them someplace else. And even as somebody who does this for a living, I found myself really pulling apart all the details, kind of slowing down, comparing options, and reminding myself that this doesn't have to be complicated to be effective. So that is kind of why I wanted to do this show, is to share what I'm doing and give you guys some inspiration on high yield savings accounts if you're looking for a place to put some of your savings. So what is a high yield savings account and what it isn't? A high yield savings account, or an HYSA, is a type of savings account that pays more interest than a traditional savings account. But before I go any further, I want to be clear because I don't want you to confuse a high yield savings account, or an HYSA, with an HSA, which is a health savings account. They have similar abbreviations and both are types of savings, but very different. And I'm not going to go into HSAs today, but I do have a link in the show notes to a whole episode on health savings accounts that you can check out. So now that I have that cleared up, an HYSA is like a supercharged regular savings account. A normal savings account at a traditional bank might pay you 0.01 to 0.4% interest per year. That means if you put away $5,000 in there, you can earn about $20 after a year. That's not life-changing money, I know. A high yield savings account, or an HYSA, pays way more. So right now, maybe between 3% to 5%. 5% would be at the very high end. So let's say that same $5,000, you could earn $250 a year instead of $20. So again, not life-changing money, but it's way more for doing the exact same thing that you were doing, putting money into a savings account. So the yield is going to be higher on a high yield savings account compared to a regular savings account. HYSAs are offered by brick and mortar banks and credit unions, which a brick and mortar just means that they have a physical location. Online banks and credit unions also offer them. In many cases, online banks and credit unions offer higher rates of returns because they don't have the same overhead costs as physical branch. So they can pass higher interest rates onto you because of that savings that they have from not having the overhead. So what a high yield savings account is not. It is not an investment. It's not a get rich quick strategy, and it's not where long-term wealth is built. A high yield savings account is about stability, flexibility, and having your savings pack a little bit more of a punch. So what is this money for that you would put into a high yield savings account? This part matters just as much as the interest rate that you would be earning on it. Your high yield savings money should have a job. For many in the military community, this money could be something for like an emergency fund. That's what mine is for. A PCS, or deployment buffer, a car repair fund, travel fund costs, a short-term savings goal fund. It could be a sinking fund for predictable but irregular expenses like Christmas or getting new tires. So you are not getting new tires every single year or every month, but when you get new tires, it's going to be expensive. And so having money saved up for that irregular expense can be helpful. Your HYSA is the money that keeps you panic proof when life surprises you. It's the money that buys you time. Remember, it's not retirement or investment money. It's sleep better at night money. So some of the advantages of a high yield savings account. So first, you earn higher returns. We're talking about 10 to 12 times the interest of traditional accounts. In a world where inflation is real, it's been, in the news, meaning your money loses purchasing power every year. Earning 3 to 5% helps you keep pace or even get ahead of inflation. So right now it's about 2.5%. If you are getting 3%, you are definitely outpacing inflation. If you can get, closer to 5, doing a lot more to outpace it. The second advantage is their safety. Your principal, which is the money you deposit, is protected. Unlike stocks, which can go down in value, your balance in a high yield savings account doesn't decrease unless you keep withdrawing it. So for families who've experienced financial stress or individuals, or maybe have some instability with their money, the predictability of a high yield savings account could be a huge benefit. Third advantage is you have accessibility. You can link these accounts to your checking account and transfer money usually within 3 business days. Some even come with ATM cards. So when the military or Murphy's Law hits, having quick access to your money really matters. So that accessibility, being able to link and get your money fast, is important. The fourth advantage is your savings are goal specific, or they can be. So you can open multiple accounts for different goals. So for example, one could be for that emergency fund, one could be for your next PCS move, and you could have one to save up for a vehicle replacement. This mental separation by having different accounts helps you stay disciplined with your savings. And the fifth one is you can automate things. You can set up automatic transfers from your paycheck or your checking account. So when you're juggling military life, kids, and just in general, whatever life has to throw at you, automation means that you're going to be able to pay yourself first without thinking about it, which is really important with financial priorities pulling us in so many different directions. It can be really easy to forget to save for your future self. So setting up that automation to make sure you're getting paid off the top right away is a huge advantage. So some of the downsides, because there are just a few, and knowing them would be helpful for you to make a smart decision about what you want to do when it comes to a high yield savings account. So first of all, the interest rates change. So if you're excited about 4% today, it could change to 3.5%. So banks can and do adjust rates. So your rate isn't, locked in and guaranteed. Another disadvantage is inflation risk. Sometimes inflation runs higher than your interest rate. It would be a rare case, but I definitely want to mention it. So if inflation was 3% and you're only getting 2.5%, you're losing purchasing power. So that could be one potential disadvantage. The third disadvantage would be transaction limits. Many banks limit you to 6 withdrawals per month for a high yield savings account. This used to be a law. I think it went away in 2020, where you could only withdraw 6 times a month, but many banks have kept that in place. So because they want you to keep your money parked in that account so they can lend it out. And some banks even charge you a fee for going over those 6 withdrawal limits. So if you're using your high yield savings account for something like an emergency fund where you rarely touch it, a 6 withdrawal limit isn't going to be a big disadvantage for you. But if you're trying to use your HYSA like a checking account and you're taking money out quite frequently, that is going to be a problem, especially if they're charging fees for going over 6. And one big disadvantage is opportunity cost. So an opportunity cost is what you give up by choosing safety over growth. So keeping your money in in a high yield savings account instead of putting in something like stocks, you're giving up one to have the other. So if you keep some of your savings in that low risk HYSA instead of investing them in the stock market, for example, which is going to give you a higher rate of return but greater risk. The stock market has historically returned about 10% per year. So if you put $10,000 in a high yield savings account at 3%, you'll have about $10,300 after a year. If you invest that same amount in the stock market and get the typical 10% return, you'll have $11,000. So that's a $700 difference in a year. So over 10 years, you can see that it's going to be thousands and thousands more. So why would you ever choose a high yield savings account over investing? A lot of it has to do with the timing and what you're using the money for. So if you need that $10,000 for a down payment on a house in 2 years, the stock market might drop 20% right when you need that money. So you thought you had $10,000, now it's going to be $8,000 if it was in the stock market. In a high yield savings account, that money is not going to go down in value. So it gives you some predictability when you have a shorter timeline. A somewhat rule of thumb is that if you need the money within 5 years for things like that emergency fund, a PCS move, buying a car, using a high yield savings account might be the better way to go. If you don't need it for 10 plus years for things like your retirement, or if you have younger children and you're saving for their college education and you've got 15 more years until they're in college, then investing might make more sense in that case. You want to think of your high yield savings account as part of your financial foundation. It's not the peak, it's not the finish line, it is the foundation. So it's a part of the bigger overall picture of your finances. So how do you choose the right high yield savings account? When you're shopping for an HYSA, I want you to think about a few things. Number one is the interest rate. Look for the highest annual percentage yield, but you want to read the fine print. Some banks offer high rates of return only on balances over a certain amount, like $5,000 or $10,000. Others offer teaser rates that drop after a few months. So it might be a really great rate of return, but again, like after 2 or 3 months, it goes down. The second thing to look out for is minimum balance requirements. Can you open an account with $0, or are you going to need like $500 or $1,000? This is important to know. So for some military families that are just starting out, a no minimum account balance might be more ideal than trying to come up with $5,000 to meet the minimum. The third thing to look out for is monthly fees. The best accounts have 0 monthly maintenance fees. So don't let a bank charge you $5 or $10 a month just to hold your money, or for some fee like paperwork or whatever the case may be. You don't want to be charged anything that you don't have to be, especially if there is another account out there with the same rate of return, the same annual percentage yield, but is not charging you a fee. The fourth thing to look out for is FDIC insurance. So you want to confirm that the bank is FDIC insured. You want to look for the member FDIC logo. This is really a must. They insure you up to $250,000 per person per account. The fifth thing is accessibility. Does the bank have a good mobile app? Is it user friendly? Can you link external accounts? Is there 24/7 customer service? That can be especially important if you're stationed overseas, or if you have something going wrong with your money. If you don't have good customer service 24/7, you don't want to have to wait 2 days to get answers if there's a problem. You want to be able to get it right away. So that's important. The sixth thing is ATM access. So this just depends. Some accounts offer ATM cards with fee refunds. So let's say you withdraw money and the ATM charges you $3 to withdraw. They're going to reimburse you for that. Others don't. So you'll have to decide if this matters to you. You may not plan on using an ATM card for your savings. So the fact that they don't offer a reimbursement or an ATM card at all might not really matter to you. So that's really up to you and what you're looking for with your account. The seventh thing is transfer speed. How long does it take to transfer money? 1 to 2 business days is kind of standard, but some could be faster than that. But that's kind of important, especially if you are in a rush to do something, if you're waiting until the last minute, or it's your introductory period is ending. How fast the money can get in there is important. The eighth thing is reputation. You want to check recent reviews. Has the bank been really stable? Do they have a history of suddenly dropping rates? Reading reviews can be really helpful to decide if that bank or credit union is a good fit for you. You might read some reviews about maybe some customer service issues that are a big point that you need, and they're weak in that. So that might determine which bank or credit union you're going to go with. The ninth one is the introductory offers. Some banks offer sign-up bonuses, like if you deposit $5,000 in 25 days of setting up your account, you'll get a bonus like $300. These can be really great, especially if you're already just planning on setting up an account and you have a larger balance anyway. But that's if you're going to save that money. You don't want to deposit money that you can't afford to lock up. So that is really important, is to take advantage of the introductory offers, but not in a way that's going to hurt you financially. So overall, you do not want to obsess over things like chasing the top rate every single month, like some new fancy feature that you won't use. You don't want to be switching accounts just to get those features. And then you also don't want to constantly be switching high yield savings account without a plan or a strategy. So more on the introductory offers and the rate strategy. Banks do want your business. So they offer these teaser rates or sign up bonuses to get you in the door. So for example, SoFi offers 4% for the first 6 months, but after that 6 months, it goes down to 3.60%. Others offer cash bonuses for meeting that deposit requirement, but I want you to think of like having a strategy when it applies to all of these. So here are some things. Number one is only chase offers if you have the savings to do it. Do not deposit money you need for bills just to get the bonus. That's kind of backwards, and it's going to cause you a lot more stress, and it might mess things up and you won't even get the bonus anyway. So you did all of this craziness for not even getting the money. The second thing is, I mentioned earlier, is to read the fine print. That 4% rate might only apply to your first $2,000. Then if you have something over that, it will drop to like 0.30% on everything. So, or you might need to maintain a $30,000 balance for 120 days just to get a $225 bonus. So definitely read the fine print, go to their website. If you've seen it in like a compilation website where you're able to compare different banks and credit unions and their rates, dig deeper, read the fine print on all of the requirements. The third thing is to set calendar reminders. So when you open an account with a promotional rate, set a reminder for at least a couple of weeks before it expires. That gives you time to reevaluate all of your options, do your homework, and make a good decision and be ready to roll when it does expire. The fourth thing is to have an exit strategy. Begin with the end in mind. When the promo period ends, don't just accept a lower rate. Check what other banks are offering. Things probably have changed. If you find a better deal, move your money if it makes sense. This is called rate chasing, and it's legitimate strategy as long as you're not paying any fees or losing any money when you're doing any transfers or interest. So you just want to be careful that you're not hurting yourself by chasing different rates. The fifth thing is to consider the hassle factor. This is huge for me. Is it worth your time and your effort to move your money every 6 months or at the end of a promotional period? Sometimes it's worth staying at a slightly lower rate for the convenience of not having to do that, the hassle factor, but also it might be something like they have really great customer service, they have a user-friendly app or website that's important to you. And so you really have to weigh, is it worth moving it? It might not be worth every 6 months, but maybe after a year, it is important to move it. So you just have to see. But with so many opportunities for high yield savings accounts out there, it can really feel overwhelming, especially when you look at a site like bankrate.com or NerdWallet where they compare rates and rewards. That's why it's really important to know first the job that you want your savings to do and what your goals are. That can help you make better decisions where to set up a high yield savings account if you know what you want the money to do. So please know that when it comes to planning and picking an HYSA, that you do not need to optimize everything perfectly. You are allowed to choose good enough and move on with your life. Seriously, like, do your homework, do your due diligence, but at some point you have to pull the trigger and like move forward with making a decision. The bottom line is to use introductory offers to boost your savings, but not to go overboard chasing rates. The goal is to build wealth, not to game the system. So, top high yield savings accounts right now. So I want to share some current options. This is early January 2026. So just so you have an idea of what rates look like if you've never looked into a high yield savings account before. So all these rates that I'm getting ready to mention change. So always do your homework and verify before opening or doing anything. So these are just a few. Varo Bank is one of the highest rates right now. They're offering 5% APY on your first $5,000. That's a very big distinction, and read the fine print. So there are no monthly fees, but you need to make at least $1,000 a month in direct deposits to qualify. So that could be great for getting started, but not great if you don't have $1,000 to put in every month. And if you have more than $5,000 to save, Varo will only pay you 2.5% on any of your balance above $5,000. So if you have $6,000, that first $5,000 will get the 5%, but that $1,000 is only going to earn 2.5%. So again, read the fine print. And always watch out for direct deposit requirements. That's really important. If direct deposits aren't possible for you each month, then you may want to keep looking and really compare that in a factor. Like one account might be paying the same APY, but one may require the direct deposit versus the other. So that's going to help you make a decision. SoFi, their HYSA currently has the offer of 4% for 6 months when you set up direct deposit. They also are currently offering $50 to $300 for eligible direct deposits. Barclays, their tiered savings is offering 3.85% APY with no minimums and no fees. So again, these are just some of the current rates. You can check them out on your own at places like NerdWallet or Bankrate. To pick the best option for you, I'm going to put a link in the show notes for you to go check out some places. So now I want to talk about having a maintenance plan for your high yield savings account. So once you've opened your account, you need to have some type of plan how you're going to maintain it. I want to give you some ideas, somewhat of a monthly annual checklist. So first, monthly, you want to review your automatic transfers. Is it still happening? Is everything going according to plan? Or has your income changed? You want to check your balance. Are you on track to reach your financial goal? You also want to scan your email for rate changes, for notifications for rate changes from your bank. That's really important. Sometimes with all the emails that were received, you might kick the can down the road or not open that one or archive it or delete it, but it could have really important information in there. So if you don't want to check them every day, every week, definitely be checking them every month. You also want to look at things like, did the introductory offer end? Because that might mean that you need to start looking at other banks and offers that they have. Quarterly, you want to compare your current rate to other competitors. Has your bank dropped significantly? What are the ongoing rates for other companies? You definitely want to make a comparison because after 3 months, things have definitely changed. You also want to review your goals. Has something changed? Did you think you were PCSing and now you're not? Were you going to buy a car and now you're not? You might need to adjust your target there. So you definitely want to be reviewing your goals every quarter. Also double check fees. Make sure you haven't been charged for anything, or maybe that was in an email that you didn't see. You just want to be double checking everything. And then annually, you want to do, a full account audit. Should you move to a higher rate bank? You want to reassess your goals. That's really important because it might be something that, you were going to stay in till retirement. Now you decided to get out. That's a big game changer when it comes to your savings. And maybe you've hit your goals. Maybe you have enough money in your emergency fund, and you now want to start investing. Those are things to look at the end of the year to make sure you're on track, or that could be a huge adjustment. When it comes to building confidence with savings and bank, if you don't have a lot of experience with high yield savings accounts, maybe it feels intimidating, maybe you've made some past mistakes that still haunt you. I want you to remember this, is that confidence doesn't come from knowing every single thing. It comes from doing one thing consistently. So taking action helps you learn, and every deposit builds your savings and financial confidence. This is really important. So taking action could be the thing that really reduces stress and gives you the confidence you need to not only get started, but to keep going for the long term with your savings. So my high yield savings decision, I haven't decided whether to leave my savings with SoFi or move them to a higher rate account just yet. I'm doing some further research on other banks like Everbank, Barclays, Open Bank. I do like how user-friendly SoFi's website and app are, which is really important to me. And again, the hassle factor, do I want to do all the work to switch everything over? So to be determined. So, but if there is a bank with great rates that you are looking at or use or think I should look at, please let me know. I'm all ears. All right, so wrapping up high yield savings account, I want to give you a little bit of a kick in the pants to take action today. So first, I want you to go to the show notes. There will be a link in the description of this video to go to the show notes to download. I have a free savings goal worksheet. It will help you calculate your goals, savings, and help you kind of sort through what you're looking for and then make a decision. Next thing is I want you to spend 30 minutes researching rates just for HYSAs today or tonight. Check what the current rates are, read 3 reviews, and maybe read those, the fine print, see if you qualify. You know how much you want to start saving, maybe move into an HYSA. So start doing your homework. And then third, if you're ready, if you've done your homework, open an account. If you could do it this week, if you have the money, even if you're only depositing $25, or you already have money that's being moved to a regular savings account and you, again, want to supercharge your savings, this might be the time to start an HYSA. And then the last part is to set up automatic transfers. Whatever your budget is that $25, it's $50, $100 or more, a paycheck, make it automatic so you don't have to think about it. You don't need to be perfect. You don't need to have it all figured out. You just need to start. A good plan executed today sure beats a perfect plan executed next month. So your financial security is your responsibility, and you're absolutely capable of that duty. I'm sure of it. So remember, high yield savings accounts aren't about getting rich quick. They're about building a foundation of security so that you can take bigger risks elsewhere, like investing in your education, starting a business, and retiring comfortably.